Today, we're diving into one of the most exciting and honestly most brutal aviation markets anywhere on the planet, India. It is a story of just mind-blowing growth, really fierce competition, and one airline that has somehow figured out how to fly higher than everyone else. So let's get into how they pulled it off.
Okay, just look at this number for a second, 12.21%. It might not look like much, but in the world of aviation, a number like that isn't just growth, it's basically a sonic boom.
So what is it? Well, that's the projected annual growth rate for India's entire aviation market. To put that in perspective, it's like a modern-day gold rush, but it's all happening at 30,000 feet. And it's all being driven by this massive, expanding economy and a middle class that is just ready to travel. Which, of course, leads to the big question, right? With all this opportunity up for grabs, who's actually winning this thing? Who has cracked the code for this incredibly complex and crowded airspace?
First things first, let's really get our heads around the sheer scale of this aviation boom. Because we're not just talking about more flights. We're talking about a fundamental change in how an entire country gets around.
And I mean, the story of the last decade is just staggering. The number of domestic flights in India has pretty much doubled, jumping from around 600,000 in 2014 to over 1.1 million today. That's not just a statistic. That represents millions and millions of people flying for the very first time, connecting cities and really powering the whole economy.
In this incredibly crowded market, one airline's blue and white tail fins have become totally iconic. So let's take a look at how this one airline managed to grab the lion's share of this historic boom. And wow, this chart just lays it all out, doesn't it? IndiGo isn't just in the lead, they are completely and totally dominating. They have almost 2/3 of the entire domestic market. That is more than double the share of their closest competitor, which is the big Tata Group, and that includes both Air India and Vistara combined. Let that number really sink in. 63.6%. To think of it another way, more than 6 out of every 10 people flying within India are flying on a single airline. That is an absolute stronghold. So the real question is, how on earth did they do it?
And that brings us right to the heart of their success, what we're calling the IndiGo Playbook. It's a strategy that's built on just relentless, ruthless efficiency and a business model that is crystal clear.
At its core, it's all about the low-cost carrier model. But see, IndiGo didn't just adopt this model, they perfected it. They run a standardized fleet, pretty much all Airbus A320s, which makes maintenance and training way simpler. They are obsessed with turning planes around fast. Less time sitting on the ground means more time up in the air making money. It is a lean, mean flying machine. So let's follow the money. Where does it all come from? Okay, 70%, the biggest chunk, that comes from selling tickets. But that other 15% from ancillary revenue, that's the really clever bit. That's all the stuff like baggage fees, picking your seat, buying food on board. It's a key part of the whole strategy. Keep the main ticket price low to get you in, and then you pay for the extras you want. Now, on the flip side, you've got the costs. And the biggest, most unpredictable monster for any airline is always going to be fuel. Look at that. It's over 1/3 of IndiGo's total expenses. Being able to manage that volatility is absolutely make or break if you want to stay in the black. But this is exactly where IndiGo is just brilliant. It all comes down to a key metric called CASK, cost per available seat kilometer. And I think this quote just nails it. Every single decision IndiGo makes is all about driving that CASK number down. A lower CASK means you can offer cheaper tickets while still making good money. It really is their superpower. And for anyone who really wants to geek out on the airline business, these are the numbers that run the whole show. You've got ASK, which is your capacity. RASK is how much money you make. Load factor tells you how full your planes are. And then there's CASK, the cost one. And while IndiGo is great across the board, their industry-leading low CASK is really the bedrock of their entire empire. But of course, no airline is an island, so let's zoom out for a minute and look at the bigger forces that are pushing and pulling on the entire Indian aviation industry. It's this classic tug-of-war, really. On one side, you have some serious headwinds, fuel prices that are all over the map, airports struggling to keep up with demand, and of course, absolutely brutal competition. But on the other side, you've got these powerful tailwinds, like that growing middle class we talked about, huge government support, and new technology, all pushing the industry forward like crazy. So what's next? What's on the horizon? Because the challenges are changing, the opportunities are changing, and every single airline is going to have to figure out how to adapt. And a huge new piece of the puzzle is sustainability. India is bringing in a mandate for using sustainable aviation fuel,
or SAF, starting in 2027. Now that's a massive step forward for the environment, no doubt. But for an airline like IndiGo, whose entire existence is built on shaving off every last bit of cost, this introduces a major new expense and a huge operational challenge they've got to solve.
And that really leaves us with the ultimate cliffhanger. IndiGo literally wrote the book on how to dominate the low-cost market in India. But the game is changing. Rivals are consolidating, costs are a constant battle, and now there are these new green mandates. So the question is, will the exact same playbook that rocketed them to the top be enough to keep them there? That is the billion-dollar question for the future of India's skies.